most of banks will onboard a customer because it's a start. You need to have guys coming in, not because they really want to offer banking services, i.e. beyond your savings account, have this and that. There's something interesting because every time I tell someone we're doing micro lending, they'll say, how do you get your money back? How does that even work?
Yeah.
And it's very interesting because people will say, people won't pay back, or Ugandans won't pay back, or Tanzanians don't pay. No, there's a whole country analysis on who pays and who doesn't, which is very interesting.
Can we get into that later?
Yeah, they'll say Tanzanians
Someone
don't
asked
pay.
a question about that later.
Yeah, Tanzanians don't pay. So
we are here live at the Tech Safari Summit. This is an expansion-focused event that's really looking at how do we scale across Africa and learn lessons from people who are experts in scale. And I'm going to be hosting this live session, this live podcast with Wendy Nanfo, who is the country director for Uganda at Yabx. And we're going to be talking about really like some of the experiences that you've had, Wendy, some of the things that you've seen when it comes to scale, when it comes to lending, accessing credit, and how that can really improve livelihoods across the continent. And maybe just some of your experiences as well from Uganda and working at Yabx. So I'm really thrilled to have you here today.
I'm glad. Thank you for having me.
How has the summit been for you so far?
Great. It's been a learning process for me, finding so many fintechs that are not exactly in the space, lending space. It's really nice to see what is really working in other spaces, payments. There's a lot, in HR, there's so many different things. And, what's also not working. And for me, the core of our business is data. It's also good to navigate and try to see what can we do together, even if we're not really in the space, say payments, but they have data. And, for my kind of business, really, where there's data, you can be able to do anything. So it's really nice to see the potential synergies that could come out of this.
Before we dive into the questions, has anything new come out of, or any insights come out of maybe the things that you're seeing in data and the possibilities with some of the companies here?
Yeah, definitely. I think, specifically, there's a gentleman I met doing neobanking, and what they're offering using a normal microfinance bank license. And, at the time where we are looking at partnering. We have a two-party business model whereby now we're going directly to the banks to use their data to qualify customers. So they are new. It's a new space. They've managed to onboard quite a number of customers. There's a million opportunities that we can be able to explore.
Very cool.
Because they haven't really gone to end of the banking services. So I think, we can look at things like cards.
Yeah.
We can look at the loans. We can look at savings products that, kind of meet the audience of a neobank. Because in East Africa, we don't have neobanks. All the banks are kind of traditional or have started doing a wallet to kind of reach the younger generation.
Yeah.
But so opportunities where you can actually have a real neobank. It's like your one-stop shop to be able to get all your financial products. So
yeah, super cool. Okay, I'm glad to hear that, and it's live on camera that you met some really cool companies at the summit. So it's great that it was valuable. I would love to go back to the beginning a bit, Wendy. So I'd love for you to tell us a bit about your, you've been in the FinTech space for a while and specifically in Uganda. And I'd love to hear just back to the beginning, how did it all start? How did you get into lending? How did you get into the space? And tell us a bit about your experience before we talk about the now.
Yeah. So FinTech for me has now become a passion, to be honest. I started out in AfriCell, so telco background, and a lot of FinTechs move along where I bring up AfriCell. In customer experience. So very close to the customer. And then I joined Jumo. Jumo was the first FinTech to expose me to what technology could do to be able to drive financial inclusion at scale. So it was a very interesting opportunity, a lot of learnings, a lot of products launched in Uganda. And from there, I tried to spread my wings a little bit. I moved to Kuda. Kuda was a bit different. It's neobanking. It was also very exciting. We're trying to expand in Uganda, and
from which country?
From Nigeria.
Okay.
To Uganda, to East Africa.
It's a big task.
Yeah. Tell me about it. Yeah, with all the regulations and stuff, that was a bit challenging. But then to see what, going back just a bit to the lending part of it, to see what technology has helped us to be able to reach, being able to scale businesses, being able to give credit to people who are unknown, literally. No one knows where that person lives. The banks that are providing this money, no one really knows this person apart from the one SIM card they have and their name to it. So it became very exciting for me that we're able to change people's lives. Small steps, baby steps, but it's bigger. It's, right now, when I look at the portfolios I used to manage before and the size of the portfolio now in quick loan, it's crazy. It's crazy amounts of disbursements that are happening every day. And so it became a very exciting journey. And then I joined Yabx, country manager for the last 2 years now. And it's also been a very exciting journey. And,
I feel like that is the perfect segue into this next question, which is kind of like we talked a lot about credits and the background and what you've like sort of done in lending. Like maybe paint a picture for people who aren't as familiar. What do people need to know about Africa's credit landscape? What is it like? And then what does that matter? Like what's the impact of Africa's credit landscape on, say, development and impact across the continent?
Yeah, that's a great question. I think I'll use reference for, say, sub-Saharan Africa. And if you look at just people who have access to credit, it's about 40%. It's still very, very, very low. Actually, if you look at people who have bank accounts, it's for 40%. And those people only have bank accounts because of mobile money penetration. So it's not
so you're counting mobile money.
Yes, it's not really your typical bank.
Yeah.
So out of that, if you look at the people who actually are able to access credit, normal bank, it's about 12%. When we even get lower to the people out of the 40% now, with all the mobile money accounts that are now opened, we're looking at only 7%. So it's still very, very low. And here, these are the markets where we're looking at where mobile money is everywhere. Everyone has a phone. You should think everyone should be potentially able to access these products, but that's not exactly the case. There's still so many barriers to this in terms of, say, data. Like it's very new, just a few years ago when this started, where we are able now to use telecom data to be able to score customers. Then access to handsets, because again, you need to have at least a handset to be able to do that. Gender gaps. So you find that, from research that was done in Yabx, you still find that a lot of women would share a handset with, say, their partner. And, you don't know who has taken the loan at that point because, the phone is being shared. So there's still a lot that needs to be done. But again, that poses a very big opportunity for companies like that, for companies like us. And if you look at mobile money, and now that they're opening up, at least there are realms for partners to come in and do the lending. And that's where the nicer part is. And if you look at Yabx currently, we have tried to partner with telcos across Africa. Currently, we're live in 8 markets. And with the 8 markets, we have disbursed over $700 million worth of disbursement at least year on year. We're looking at 15 million unique customers. So we are, but again, that's still under the 7%. So there's still so much that we have to do in lending, but it's at least we are in the right direction, heading there. And hopefully we can be able to increase that number.
I feel like that idea of like us being just at the beginning and this idea of there being so much more is this thing that we've just consistently come across today, where it's like, you think about the demographic dividend here and it's like we're growing and we're just at the beginning, and there's even more population growth and more workforce here that we're going to expect. Or even Paystack saying that they have like 50x'd the amount of the volume that they've seen across Nigeria, which is just crazy since they started. And so it's crazy to think that you've done so much volume, but actually you're just starting and there's so much opportunity there.
It's crazy, but there's so much that needs to be done, because there's also limitations that would come from having to serve people who have been excluded, making sure that they understand the product and you're not indebting them. A lot of players will design a product lending is very profitable. So designing a product where just saying push out money, charge a high interest and bring the money back. We still have to be very sensitive about the customer. Are they being charged correctly? Will they be able to afford their next meal if I deducted their account today? That means pricing has to be designed very carefully. The product has to be designed carefully. And it takes one to have a proper mission, to know where they're going, to be able to focus on that. Otherwise, you just put our money there and try to pick it as fast as possible, and then at the end of the day, the customer suffers. They can't afford their bills anymore. So
this is actually another great jumping off point. Like, tell me about what is the Yabx engine? Like, how does Yabx work, and what's behind the the kind of the stats and the numbers about dispersing loans and supporting with that?
So Yabx, we are credit tech. So we offer that as a service to different parties. We have quite a number of models that we do. So our expertise is in lending. As I mentioned earlier, we're already in 8 countries, and all these we are lending. Products range from overdraft products, so more of like a convenience loan. I'm in the middle of a transaction, I don't have enough cash. We come in immediately and say, would you like a balance of as low as, say, even lower than $1, 50 cents, to as high as about maybe $200, $250. That's usually the range across all our markets. And, then we have term loans. Those would typically go for a period of, say, 30 days plus. We do have device lending for markets where handsets penetration is still very low. And you look at, say, certain countries like West Africa, where it's very bank-led, so everyone is focused on the bank and card, and then you find that smartphone penetration is not as high compared. So every market we go into, yes, it's a lending product, but very specific to the need of the market. We also have merchant lending coming in, so for your typical merchants that need working capital for the day or for for the week, we also are doing that lending. So what we do mostly is use any data. So there are 3 approaches that we use actually at this point. So we have the 3-party model, where we approach telecom companies that have, of course, big amounts of data. We also look at, we partner with the banks that didn't have the money to be able to lend. So we don't really, we just are an enabler in this partnership. So then we do the scoring of the data. We do the risk and portfolio management of the portfolio. We share on the risk in there. So we approach all the parties, and everyone has a big play. We usually have the biggest contribution in terms of operations of the whole projects. So then we look at, the banks will bring in the money and their licensing. So that's a good one, because then we don't have to struggle with licensing, which becomes a very hard issue. And then for the telecom, they bring in their customers and their wallets, which collect and also disperse the loans. So that model works really well for mobile money-led kind of ecosystems. And then we have the 2-party model, where we've seen, for example, we recently launched a product in Ethiopia. So Ethiopia is very bank-led.
Yes.
And
was it this year?
Yes,
early
this year.
Yeah,
early
cool.
this year.
Nice.
So very bank-led. Everyone somehow has a bank account. But, banking products, the traditional banking products, don't design products for every customer that comes in.
100%.
Most of banks will onboard a customer because it's a start. You need to have guys coming in, not because they really want to offer banking services, i.e. beyond your savings account, have this and that. So we also score that data, use the alternative sources of data that we have, and be able to design products that fit the customers of the bank that customers are unable to score at that point. So we also have that. Then also scoring as a service.
Yeah, cool.
So anyone that has data, and that's what was very exciting with the conference, because now, looking at everyone that has data and say we can actually potentially do something.
That's awesome. So you actually enable them to make the decisions and disperse themselves, but you just give them the data. Like you help them score. They give you the data.
With the portfolio management on top of that. So we run everything else.
Yeah.
Give us the data.
Yeah.
Put the money on the table.
Yeah.
We make you the money, I guess.
Yeah, cool.
Yeah.
That's
So in terms
really
of numbers, like I mentioned earlier, 200. We're looking at $700 million that are dispersed in every year. 200 million customers now that have been scored.
Yeah.
With 15 million of that, being our active customers, unique customers.
Yeah.
And that number is still growing every minute, which is very, very exciting.
That's awesome.
Yeah.
Okay, I feel like this sort of points towards this direction of and this idea of like financial inclusion, right? This word gets thrown around a lot, and it's connected to lending. I think you've actually talked about maybe the other side of what credit can look like, which is not financial inclusion, but actually can harm. So I'm really curious, like, what does financial inclusion mean to you? And then also, like, how does Yabx think about financial inclusion as a company?
That's a very interesting question, Caleb. You can't even imagine, because I think we throw it around, but don't exactly have it embedded in our processes. Just because you are able to give someone access to something, you also need to be able to know the impact of your access to that person.
Yeah.
So for me, financial inclusion is to be able to kind of provide, for example, I'll use the products, the lending product, to be able to provide someone with credit, but in a dignified way, i.e. don't indebt them, give them a fair price that they will be able to repay and grow with them. So let those limits go up slowly, grow with them, but also at what point, at some point you should be able to, this customer should be able to be in a position to access complex financial services. Now, like a level of, you didn't have anything, you didn't have any digital financial footprint.
Yeah.
And now you can actually be able to go to a bank and ask for, say, a small business loan.
Yeah.
So that's financial inclusion to me. That growth, say, if I gave you a loan 5 years ago, now, today, I want to be able to see that there's change. You've learned something. Yeah. It's financial literacy too. Yeah. It's me teaching you, you don't have to take money that you don't need. When I'm offering you the loans, so that's what financial inclusion is to me. And in Yabx, and why I enjoy working at Yabx very much, it's embedded in we are very customer centric, and we would look at pricing, for example, on the customer, market conditions when we're designing these products, making sure the products we're designing are fit for every person. And so there's something interesting, because every time I tell someone we're doing micro lending, they'll say, how do you get your money back? How does that even work? Yeah. And it's very interesting, because people will say people won't pay back, or Ugandans won't pay back, or Tanzanians won't pay. No, there's a whole country analysis on who pays and who doesn't, which is very interesting.
Can we get into that later?
Yeah, they'll say Tanzanians
Someone
don't
ask
pay.
a question about that later.
Yeah, Tanzanians don't pay. So, but then you look at all these markets, when you, which I think we'll talk about when we're talking about expansion in other markets. Yeah. We are offering, yes, the product seems the same, but you have to look at also the culture nuisances of those particular locations that you are in. And in Uganda particularly, the willingness to pay is high. Yeah. Which a banker would say is totally different. But the question becomes the ability. So for me as a micro lender, I need to know that at the back of my mind, that while I really want to disperse a lot of money, I can't, because my people will not be able to afford that. My customer will not be able to afford that. They need the money. And, you have someone who has taken out, say, the first loan, and after a few rounds, it's the loan number 20, but now you're giving them a loan that is equal to their salary. What do you think the priority is going to be? So Yabx has put these behaviors in context to see, okay, we're not really penalizing you for, say, a delay, but we're saying, okay, maybe your limit will go slightly lower, not to zero, because then you give me money and then you kind of handicap me the next time. It's the trust. So it will go lower for you to just know, oh, when I pay back on time, I can be able to get a bit more money. Yeah. If I pay early, I could still get more money. And if I do this, I could do this. That learning of, that's financial literacy at the bare minimum. But, it's not information you can just go on radio and start teaching someone about. So I appreciate that there is that embedded in our SMSs, the lifecycle messages, the customer journeys.
It also sounds like it's very much embedded in, it's not just we're going to sit down and make them read a page that says this. It's like, it's actually embedded in the product and how the product functions, like the touch points, the behavior and incentivizing that behavior.
Yeah, I mean, I've used, I've sat on a border and, randomly going like, so have you used quick loan and this and that? And, it's like full-blown quick loan class. It's like, yes, when I pay back, this time I'm a bit late, I'm worried, it might go down. I need to make sure I pay it on time and manage my money so that by the time I get my, if I have to pay bigger bills, it's like that financing. So you learn, it's not like written budgeting. But this is, you're about a guy knowing like, oh, I need to budget a little bit so that, my limit doesn't go down. But at the same time, we know that we're not going to give that border guy $1 million shillings because it's going to take him, say, 3 months to make that kind of money. And the loans are 7 days, 30 days. You're crippling him immediately. So you just enable a little bit, cover your expenses now so you can maybe divert your money to do other things, maybe another business. And we see a lot of business loans. We see a lot of other like women who sell like vegetables on the road that will say, oh, I didn't have, I gave all the money I had, the working capital, i.e., to say school fees season. I don't have anything, but I need to still work. So, knowing that they can be able to trust and know that at the time they come to the platform, they'll be able to get money, not big money, but to be able to restart their business afresh. So I think it's very powerful.
Yeah, unreal. And okay, like maybe let's dive into that a bit more. Let's go into like places, so like geographies. It's interesting you said that like different countries have different reps. We were actually just in May, we're in Francophone Africa. We were with Amadou, who's the country director for the region, which was awesome, and a few of the partners as well, Kofina, and also Rajat came as well. It was a really interesting session that was focused on this idea of like FinTech and credit to enabling credit in Francophone Africa. It's really interesting to see like the consumer behaviors that were different and like how they were different from Anglophone as well. And I guess I'd love to ask you now, operating Yabx in Uganda, how are the behaviors different? How are like the consumer behaviors and habits different in Uganda when it comes to loans, and what are the attitudes towards loans? And maybe like on the sort of benchmark of like great to not great when it comes to like lending in countries, where does Uganda sit?
That's very interesting. That's very interesting because, like I mentioned earlier, I'll speak to a banker and say Ugandans have the willingness to pay.
Do they believe you?
And then the banker is like, what are you talking about? I need to chase around everybody to be able to pay back, but they're also lending a lot of money. So I think one of the biggest differences that end up kind of pushing the way customers behave is how the ecosystem is built. So as opposed to Francophone countries or West Africa, we see that East Africa, Uganda, is very mobile money led. Just that makes a very big difference in how people behave, especially also when it comes to credit, payments and credit. So Francophone, which is bank led, you find that the adoption of bank accounts is readily available. Everyone is using card for this and that, but credit is not as the same. And I mentioned this earlier, the bank is not designing credit for the lowest income earner, who has a bank account, by the way. So, and then the difference again in Uganda is that because it's mobile money led, and we know the good thing about the tiered KYC, that they now have a mobile wallet that's already automatically injected in there, a few transactions, and we can qualify for loans. So we find that adoption of credit products is very, very high compared to Francophone. So it's not new, it's already there. I'm using the wallet for everything, this and that, and you can see it also in Kenya now. I'm gonna be able to take out money and trust that I can pay back, trust that it's coming from a good source. If you're concerned, I don't think anyone would be, but
sorry, what's that?
I don't think anyone would be concerned about where the money is coming from if it's on the phone, but
sure.
But yes, so that's the biggest difference. And then the other thing that we see outside of lending is the growth of circles. More on this side, because people have to save.
maybe just for our like non-Eastern African, like listen, like what is a sacco? What is a sacco?
Oh, for the
Or non-African. You know, we have a global audience.
people who stay in Kenya should best explain circles.
Yo, what? No, come on. I'm asking the questions here. Okay. I'm gonna kill this.
Yeah.
But a sacco is like a community. It's like a cooperative. So you each save and sort of contribute to this. Then you can each access money at different times that works within that group.
Yes.
And in Ethiopia, they call them an ikub. I think it's called an ikub, which is like a different word for it. So it's interesting that they've always existed in different like African societies where you don't have as much. Where you have to pool together resources. Here it's like chamas. Like they call them chamas, but also saccos. And there's versions in West Africa. So it's interesting seeing this like thing just come back a lot
over time. So there's been a high growth of those in Uganda in the last few years. Actually, I think 3 years. But because of there was also government incentive around saccos and them growing. And you know they're serious. They're one of the saccos in Uganda actually was recently licensed by the central bank.
Whoa.
Well, no, like you're holding way too much money for you to be operating as a circle. We now need to watch your kind of situation and regulate. So that has grown, which has of course also increased the lending in the industry, credit in the industry, access, and people learning more about financial products. And interestingly, we also see the more people are involved in that kind of things, we also see our numbers going up. Because now there's more education, there's better repayment rates, which is very good.
It's interesting, like that idea of community-led being such a big feature of like culture across Africa, of many different African cultures, but it being such a good like it's almost like social pressure to behave and to do the right thing, and like seeing that play into like saccos and lending behaviors is very interesting. You know?
It is, and helpful. And super helpful because they know, like, you know, you have your neighbor who's telling you can default. You learn.
It's like, hey,
default.
because he won't talk to you if you default. If you're in the same sacco.
You have a problem and no one will come to save you. So it's nice that they're growing because then we see that impact on the portfolios. I think one other thing that might have been a bit of a challenge to adoption of particularly microloans for other players. I mentioned earlier that we're not particularly the way we structure our model, we don't require direct licenses from the countries that we operate because we use bank money and the license we're lending on behalf of the bank. But there are players that are in the same space with us that then use they lend directly off their loan book. And the challenge with this, UMRA, who's the regulator in Uganda, for money lenders and non-deposit taking institutions, comes up and says now all interest rates need to be capped to 8% per month, which is okay by the way. It's just that the way, because when it becomes a short-term loan, there's a way it skews how the numbers work. And that put back a lot of FinTechs that were now operating solely on their own licenses because their products were designed differently. You can't add a rollover fee. Application fees were capped. Everything is now being kind of there's light being thrown into the spaces. Meanwhile, on the other hand, banks can be able to charge as high as 24%.
Rents.
Which is it's a bit unfair.
It's not fair.
It's a bit unfair, but the regulation kind of also leads. So you find that numbers on that side, you need to make sure you're only lending to the customers that you know will pay you back on time. So their behavior is different. So you kind of targeting your cream de la cream. And not exactly the guys who are at the bottom of the pyramid.
Totally. And it also means that these people don't actually learn those behaviors, and so they're more likely to go to bad actors or loan sharks. They can get better loans quickly, but end up in more financial trouble. I want to ask one more question, and then we can go to the audience, which is, if we get this credit thing right in Africa, if we get it right and can unlock it at scale and go deeper, more than 7% access, what does that mean for the average African person? I know this is very general, but the average African in 5 years' time or 10 years' time?
That's very interesting, because when I look at it, when I think about it, I only hear one thing in my mind, is that economic mobility.
Cool. Okay. Yeah.
To growth. So instead of someone, always looking for money, so now say access is resolved because your credit score using alternative data, that's problem solved. But you're just surviving. You're taking these loans to survive, to pay for very small things that are already adding so much value to you as a person or to the people that you live with, let's say the family. So growth should be, I'm able to access this product now, and in 5 years my limit should have moved a little bit higher. In 5 years I should be able to access other products that say other use case specific products, say school fees for my child. I should be able to qualify that because now I do have a financial footprint that someone can be able to say, oh, I trust this person to give them money. And we're talking about the woman deep in the village who the bank doesn't know, to say I can trust beyond giving them $10. I can trust to give them say $250 for them to start their business without having to carry any. So I think that's the change that I see that will happen. And of course, you mentioned about the risk of the money lenders. Every lending has to be secured, today in a way, if it's traditional lending. So I'm looking at 5 years being the kind where you can take a use case specific loan for your business without having to literally use your entire family as collateral, your house and everything. So that risk to be separated it's what I kind of look at.
That's so cool. I feel like the whole mobile money story and its impact and its growing impact actually in Africa has really helped alleviate a lot of these challenges to access to money and like people sending money to each other and doing small transfers, which has allowed economic mobility. And that's pulled parts of M-Pesa's story has pulled parts of Kenya out of poverty. They can now start businesses, transact faster.
Yes.
It feels like the next layer is actually this credit story. Yeah.
Yes, what next? Like, thank you. Access is now solved. We still have time to solve more. Because access actually now, a lot of people, if you look at, East Africa mostly, and also Africa, smartphone penetration, everyone now just has some sort of internet penetration.
Yeah.
What next?
Exactly.
What are the products we are designing today going to do to our customers tomorrow?
Yeah. So interesting. What a way to wrap up. That was great. That was so much fun. We're going to go to the audience. So who here has questions for Wendy and I on scaling credit across Africa? So Mariana's just asked Wendy for her approaches to credit scoring in Africa and risk and how you guys think about risk.
Across the different markets. Yeah, that's a very good question. And I think it also kind of dives into expansion because if you do it wrong, then you won't be able to actually scale. But so in Yabx, what we have done is, the smart guys in the back end. Thank you, the smart guys. But so we score whatever data that is actually available to us. So our biggest experience where we started was telecom data, where we can be able to see transactional data and look at repayment behavior and score that going forth. But then you find markets that don't exactly not mobile money led. So you don't exactly have the data to look at. That's going to play out very differently because then that some variables might be the same or some data points might be the same, but will greatly differ because of, again, culture nuisances. So the data is differing, but also the way people behave differs. So while the technology or the realms might be the same, the products will be different. The way we end up looking at those products will be totally different too. So the way you look at a product where we're at our two-party model, where we approach banks or any other, say, fintech that has data, it's going to be different because now you have to learn the behavior that is influencing the factors that are influencing the behavior of the customers that are in that demography, like where they are or why they're using the products they're using, where are they spending, which is different from how say East Africa would be like. So in an economy where it's more mobile money led, So the back end might be the same, but yes, we approach it differently. We look at customer behavior very greatly. We also we have the model of getting into the market with a small needle and kind of learn and expand. So getting small time and then, try to figure it out slowly. So even though we have a lot of experience in some markets, we have learned, and we've also learned hard in some places whereby we know it all, but no, now we know that we're going to get in, we're going to take time to learn that Wendy is very different from Caleb in the way they transact. It's not just about the amount, it's just how they perceive certain things. Yeah.
So the question is just for the audience, have you had an experience where you've been into a market, you've launched in a market, but collections or performance hasn't actually aligned with what you expected or wanted? And how did you approach that? How did you pivot or move out?
Wow, it's a great question, because there's so much. We work in such a dynamic space. Like when you talk payments, it feels like you know what's going on. The regulator wants you to do ABCD and that's it. And it's kind of, in a way, somewhat structured. Lending is fully, like the kind of lending we do is fully dependent on partnerships. It's the biggest asset that we have. We rely on customers. You have data, you have customers, great, let's do business. And every single time your core business, somewhat 50% of that is you have to rely on another party. There's going to be a lot of drama. So, and that's why we're laughing before. But if you look at, so for example, difference in strategies, I might want, with my experience, we might want to get in and say, we'll start with say 100,000 customers for a pilot of 3 months. But the partner is too excited and says, no, let's do 1 million. And somewhere, those decisions that might come up with the pressures this way and that way end up putting you in a very not nice place. If you're not either well experienced in what you do, or you have the strong relationships with the partners that you're working with, you find yourself closing shop.
Yeah. And maybe to double down, on that question, how did you navigate that partnership and that, that difference between maybe what you said would be delivered and what wouldn't, especially when you have these big bank partners? How do you manage that, and how do you kind of work around that with partners and get them to see that?
I think with this kind of partnerships, again, banks, they will not be a typical, there's digital, now they're digital channel managers.
Yeah, okay.
Who would have an idea about mobile lending, but on a small scale. Because look, Yabx, we're about 200 people managing Yabx microlending products. In the bank, it's going to be one person managing the card business, that is digital channels. They will not have the same information I have. They will not have the same faith that I have in the product. They will not know how it works. It's very hard for them to kind of catch up. And I think one of the things that have really helped us is to give them as much information as possible to make sure that my partner understands the challenge, understands why we have to do the things we do, understands that every decision is this is the impact for this decision. Take the time. I will make you understand so that it can be beneficial to both of us. So, and that's the approach that we got. We make sure again, like I mentioned, partnerships in our kind of business are very important. That means relationship management is very important too, to make sure that they are well versed, they have the right information. When they look at the numbers of our portfolios, they're like, okay, this is when the kilo of sugar went up. The price of the kilo of sugar went up, and we're seeing this. This is when this, and they have that information readily available. Some of the things that we also do in country is, I do have a desk in the bank. I will go sit and have 2 working days. But for me, it's not just that, it's a normal meeting. No, I'm there to make sure that the people who are supporting the products, who are making the decisions, make the right decision by me giving them as much information as possible. Because if there's an information gap, that's it. Because a typical banker is going to look at an event where repayments are not looking good, the NPLs are going crazy. Meanwhile, that product affects also the NPLs of the general performance of the bank. The next thing I'll be saying, no, we can't do this. But if they have the information and know, you see, we're going to get out of this in, say, 18 months.
Yeah.
We're going to be here. Then it becomes it becomes easier.
So interesting. It sounds like for corporates, perhaps like there's a very high, and banks especially here, it's like there's such a high bar for trust.
Yeah.
And even when you have better data and maybe you can make better decisions, there's like, you really need to convince one person who's only seeing one element of the thing to like trust you and trust your process and your technology, especially when it's new.
Yeah.
I think the analogy, or like just the story of, I have a desk in the bank just to make sure that they're getting it and that they're seeing what we're seeing and they're close to us. It sounds like trust building.
Yeah. How do you make a decision about something that you don't know?
Yeah.
And I'm not saying that you don't know because you don't want to know. It's not your core business. You have other things to do.
Yeah. Yeah. Literally. Yeah.
So it's in my interest to make sure that you know, and you know that the product is performing, you know that the product is profitable, you know that in case we have a hiccup, this is how we're going to get out of it. I'm there.
Yeah.
If it's raining, I'm there. If it's hot, I'm there. Like, so, yeah.
The lengths to build trust.
Yeah.
Awesome. Any wrap up questions from our audience? No? Okay. That's great, Wendy. Thank you so much for being on live at the Tech Safari Summit. Let's put our hands together.
Thank you for having me.
It's been such a pleasure.